Welcome back to another episode of Investing Explained. Here's today's question. It's surely a question that I asked myself multiple times before, given that Berkshire Hathaway currently is the biggest equity position I hold. So, to answer the first part of your question about the earnings for the subsidiaries, yes, they are all included in the earnings for Berkshire Hathaway. They're not disclosed separately, and Warren Buffett has several times explained why. Since he's not required to do so, he really finds that there's no reason to give that confidential information to his competitors. So yes, all the earnings from the subsidiaries are simply added together. It is what accountants typically refer to as consolidation. And also included in the earnings of Berkshire Hathaway is the second item you mentioned in your question. Both realized and unrealized gains are included in the earnings. So, for example, if Berkshire Hathaway has $100 in equities, and the value of that portfolio appreciated 10% over the past quarter, the $10 appreciation would still be recorded as earnings regardless of Berkshire Hathaway selling that position or not whenever the next quarterly income statement is being disclosed. And this is a very recent change. And if you think that it makes no sense because it makes the earnings very volatile and you can't use it for valuations, you're definitely right. Keep in mind that Berkshire Hathaway's portfolio is currently valued at more than $200 billion. So a 10% change in that would result in a $20 billion reported earnings or loss, which completely distorts the picture of the fundamental value of Berkshire Hathaway. You know, that's a company that has a solid stock portfolio where the price might change 10% quarter over quarter, but that doesn't change the fundamental value at all at the same speed. And also in the earnings, you have the close to 100 subsidiaries that Berkshire Hathaway owns who are steadily appreciating in value, but they're not listed separately. Now, there's also a third component that you didn't include in your question that I would briefly like to touch upon. Consider Berkshire Hathaway's 5.4% stake in Apple. So, in 2018, Berkshire Hathaway only recorded $745 million in dividends in their earnings, but the share of the retained earnings were $2.5 billion. And of course, you can argue that continued performance will eventually turn into a higher share price and then indirectly be recorded in the earnings statement, but it doesn't happen in lockstep with the share price. That's another argument that while I do suggest that you read the earnings statement, please do not use it as a valid input for your valuation.
This was a great question and probably one of the best questions you could ask to understand accounting and financial statements.
That's it. Preston and I will continue explaining investing, so go ahead and hit that subscribe button.